So you guys know we are in DC. We're in DC. So kind of another thing I want to talk about regarding the governance is to analyzing the regulators' comments. What does that mean? Regulators' comments means so a lot of times regulators also has a lot of information. We want to analyze how regulators regulate the capital market. So kind of this type of governance is very high level. We are not talking about the governance of the corporate managers. We're talking about SEC. How SEC regulate the capital markets. We can analyze that government agents as well within the data, using a lot of data. So what data we have? So you guys can see that one thing you can see that this is the prospect summary. For example, let's take out the first example. One is common letter. So what does common letter mean is the SEC will give out a common letter to companies. So let's say if I'm Microsoft, if I doing my financial statements or my disclosure, I was not in compliance with the SEC, and the SEC will write a common letter to Microsoft saying, I don't see the disclosure you gave out is accurate. Do you have any comments on this? And Microsoft will write a response saying, I'm sorry, I made a mistake. I corrected. So this is a new version. Are you happy? So these are the inquiry from SEC, and Microsoft will respond, and then finally will resolve all the issues. So that's one case, right? Or Microsoft can rebuttal. SEC send a letter to Microsoft saying, I don't see what you disclose here is right. Are you sure this is what you guys are doing? Microsoft will say, I'm sure I'm right. The reason is because blah, blah, blah. So firm can, of course, they rebuttal some of the inquiries and tell SEC, we're doing the right job, you just didn't understand it. So basically, one concept here is the SEC, whenever they feel something is wrong, SEC will send inquiries to the focal firm, the firm potentially under investigation. And the firms has the opportunity to respond and explain, and then we see how it goes. If it goes well, then the case will be closed. If it doesn't go well, it will be severe outcome. Maybe they will go to the class lawsuits. There's something different. And the common letter is available online. So you guys can see the SEC send letters to which company and what contents of the letter and who signed the letter. So you can see which one from SEC signed the common letter. So that's the interesting data you guys can see. So basically, SEC sending many common letters to the firms they feel they can be potentially under investigation. And the firms will respond, and SEC will send back another common letter or close the case. So if you on the SEC website, you can see all the common letters, like which company SEC sent to, what's the contents of common letter, and which staff, which talent from SEC send out the letter. You can see all this information, and then you can use the textual analysis we talk about from the class to analyze what's going on. Is the firm in trouble, or is the problem resolved? You can understand all this information by understanding the common letters. And then we also talk about another data here. It's called S1 data. What is S1 data? S1 data is when the company go public. When the company go public, they want to file the S1 form just to tell SEC, sir, I think I'm doing great. I want to go public. I want to be listed at a New York Stock Exchange or NASDAQ. Could you allow me to go public, and I can raise more capital from the capital market, from shareholders, and I can contribute to the U.S. Economy. So the company who want to go public, they will file S1 form to SEC, and SEC will do the monitoring. And then if you think everything is good, they will allow the company to go listed on either New York Exchange or NASDAQ or some other small exchanges. So what's the content of the S1 form, which is proposal to be listed? So you can see that they kind of give you information. You can see that they trying to give you all the statements, and they give you risk factors. So one thing is risk. Like if I go public, what the risk would be? and also give you the financial data, of course, right? So this is some of the stuff, and the risk as well. So these are the two things we want to talk about. So basically common letter. So SEC can give common letter out to the investors, to give common letter to the focal firms who can be potentially under investigation. So that's common letter. Another one is when firms want to go public, go listed, they will file S1 form to SEC. If SEC approves, and then the firms can go public, can become a public company from private firms.